let me start from the beginning.
Yeah, I guess just to kind of rehash on the potential use cases, but then interesting to hear your perspective. One side was obviously some of the stuff on the KYC compliance side. So we're not the broker, but in a sense, stuffing that into a pending table in a secure fashion and having that be in some sort of permanent storage. That's sort of the one area on the KYC, and then the other area is as we get going, we're going to have some services that say charge us a fee when we get someone linking in an account that might not be a customer, and then we also will have revenue accruing on a sort of daily basis on the assets in an account. So it'd be interesting to kind of see even on a level of monitoring or reporting that in like a semi-real time level. How much are we spending on the accounts being linked? How much revenue is coming in off of that? Looking at that on like a faster basis than on like a QuickBooks level.
Sure. Okay, right. So Subledger is perfect for that kind of thing. If we do say so ourselves. I mean, we built it specifically for making it easy to implement a real-time accounting system in extremely traditional double entry accounting terms. Your accountants, CPAs, auditors, compliance people will all kind of intuitively understand the structure of the data because it is literally 600-year-old double entry accounting, right? It's credit, debit, in accounts, aggregated for reporting, complete transparent audit trail, totally immutable storage of what went down and when and why. For KYC and AML purposes, we provide a reference URI link per entry that we recommend point to a static file that satisfies all audit needs, and that can be both financial, so think of it in terms of invoices and payment vouchers or any sort of justification required to prove why the financial state of the entity was changed at that moment in time, so that we don't need a paper trail, so to speak, to back up the entries. Like every single entry you make in the system can have, for instance, KYC and AML scoring for the individual that executed the transaction, their current address, contact details at the time that the entry was made for them. So all of that can be verified and tied out into kind of your overall compliance picture. And there you go. And then all balances, we've been running average latencies now with our new release of about slightly under 0.7 of a second. So when you make an entry in the accounting system, we are up to date less than a second later. Okay. Does that make sense? I'm not seeing any.
So yeah, I think I got that so far. Yeah.
Okay. And that kind of describes that describes what Subledger is. And we have customers that are making 1 million entries a month, over 1 million entries a month across 350,000 accounts. And so we can handle the volume and scale that kind of this would imply, right? For your needs in terms of accruing for your fees and such, pretty straightforward, right? Like the balance can be read from a customer's account, which would be represented in Subledger. Interest calculations applied. The entries made to I suspect that would look like a deduction from their balance.
Yeah, it's usually a deduction, but it's not deducted until either they decide to say if they close their account or the end of the quarter or end of the month.
Got it.
So it accrues, but the deduction would happen on a more regular period.
Right. Got it. Right. So that could be probably the way you'd handle that then is accrue it into a kind of a temporary account. And then when it's applied to their account, you could just move it from the temporary into the permanent, whatever the balance is. Again, we maintain all those balances and make it really easy to write that kind of software.
So, and yet you have and if it was sort of like you wanted different structures based on maybe the account type or the amount of dollars in the account, that's all kind of built out pretty easily. Or
explain what you just said, please.
So like I guess if we had like a tiered structure, the first $25,000 is $0.5%. The next $25 or $1,000 is 0.2%, and then anything above that is 0.1%, or something. Something where it was based off of like a ladder.
Right. So let me simplify this for you. So we don't ever make entries for you.
Okay.
Right. So what you're describing is logic in your code.
That business logic. Yeah. Right.
So yeah, I mean, it's that such things are certainly trivial. I mean, you read the account balance from us. That way you don't have to deal with or maintain or have multiple sources of the truth, which is always kind of a very scary proposition. And then you apply, you run it through an interest calculator.
Yep.
Or sorry, a fee calculator, and then use that number in the subsequent entry. We highly recommend very formally keeping track of the transaction types, and Rashawn would certainly agree that there should be a single responsibility class or module or whatever terminology is in that crazy language he prefers. Yeah.
Thank you, Tom. It's actually true.
You're welcome. The to implement those transactions, right? So there's a very kind of tight linkage between loose but nicely linked environment where the software says, okay, we need to do this now, and then there's something that calculates it and builds the transaction and puts it in us, right? So that the code to do such things doesn't end up strewn about the system. In most businesses, there actually tend to be somewhere between 6 and 12 individual transactions that just get repeated over and over and over and over and over again, right? Like, so that all becomes fairly straightforward. And then the at end of month, when it's time to sync up with QuickBooks, you can print reports from us of the entire system balance sheet, with which by definition, because it's real time, needs to include a complete income statement and equity. We can show you how to structure all of that. It's all totally straight up accounting. You hand that to your accountant, and he can take the differential between last month's and this month's and make those entries across into QuickBooks really trivial at kind of a high level. Like, here's total income from the platform. Bang, done. That makes sense?
Yep.
Yeah, so literally, the information that you keep in Subledger would be a Subledger to your system of record, with highly detailed entries so that they can all be proven and audited, to the finest level of detail with no issue. And very importantly, a pretty strong firewall between any need for them to, at audit time, to get into your technology. I found an engine yard that we paid tens of thousands of dollars a year for KPMG to understand how our accounting system worked. With Subledger, that would have been entirely unnecessary, right? Because it's all accounting. Like, it could just simply be audited. They don't need to see Rashawn's code and understand whether it's getting applied properly.
Yeah.
All of that. It's like the entries are right or not.
Have people built a fair amount of like reporting tools on top of it, or do you more kind of just pull it from the API and then use sort of whatever tool that that would be good?
That would be how individual customers build their own tools to access the data in the way they want. We provide a streaming real-time backup into S3 of everything you put into us. So all of those transactions can be, Hadooped and that sort of thing, all against, your own fully controlled copy of the data.
You work with, I guess, Amazon Glacier at all too on the compliance side, or? I don't know much about it. I heard it's sort of their like compliant S3 or something like that.
Yeah, I think you can migrate data to and from S3 into Glacier. We always assume that that would be something we'd implement on the back end. Like if you guys want to turn on Glacier export or whatever on your S3 backup, then by all means do so.
Okay, yeah. So you could be like, yeah, on this sort of particular table, we're gonna, in a sense, keep a permanent record on Glacier, and that would just happen on the back end in a sense.
Well, I mean, you just like from my perspective, the only concern of yours is, can you hit our API and get the data? And if I use Glacier or not, it's not terribly. But again, you will have your own copy of it, and if your compliance people feel that all that data needs to be provably in Glacier, then by all means put your copy in Glacier.
Yeah, it usually comes down to whatever standard, right? And then
well, I assure you, Glacier is not part of any standard.
So yeah, I guess it's more of our people in the industry using it. If they're not, and bigger people don't care, then you're in the same boat. If something goes wrong with Amazon, right? Check the rule.
So I mean, Amazon has different regions, right? Even for S3, we back up to the U.S. standard region. If you make a bucket that we back up to that's in the European region, they both get backed up to in real time. I mean, it's literally going to require, we need a dinosaur killer to take out both regions.
Yeah, I guess the one other question, I guess, now that you brought up Europe, I think in kind of near future, we want to start to expand a little bit more, whether it's in, non-US dollar investments, which would then have, a currency component, or, potentially, European clients.
Yep.
In terms of kind of the accounting side with multi-currency, is it sort of more we're just going to register, an FX rate that we believe that transaction occurred at, or would you just keep all the transactions and say local currency, and then when we would convert it more into kind of the business logic post pulling it for reporting? Or
okay, so we highly recommend that you keep currencies in their own books and not try to do any real-time conversion.
Yeah.
Like track euros and dollars, and then after the fact, you can produce kind of combined reports by taking one of our you render a report, which is in Subledger, it's effectively just units.
Yeah.
Right? And then you can apply a currency conversion to the euro units to convert them back to dollars for a very specific moment in time, and then you just combine them, right? It's very straightforward at that point, what you need to do, right? But definitely keep them separate, because, I mean, that's the truth, right? Like if you sell 10 euros worth of something, then you sold 10 euros worth of something. Like that's inarguable. But if you convert something on the fly, then you can get into a discussion about whether you've followed the conversion and management techniques properly.
Oh, yeah, exactly.
Does that involve a default currency or not? So in other words, if everything is being held in, say, euros, and then, say, Japanese yen comes along. Or,
I guess, yeah. So is there? I'm guessing there's a system, probably default currency, but then there's probably on a client or sub account level a way to. Yep.
We just entirely. So the entity structure in Subledger is you make an organization. That's you guys. Organizations have multiple books. There's various things you can use that for. You know, it could be subdivisions, that sort of thing. But currencies are the most common use case for that. So in your organization, you'd have a USD set of books and a JPY set of books, and whatever kind of transaction it is happens in one or the other. Conversion operations, when you guys actually convert, if you ever need to, and no doubt you will, then you make an entry in each that references a common conversion source document that says, okay, at this date and time, we convert this many euros to this many dollars at this rate, boom, done, right? And the dollars or the euros would leave the euro side and enter the other side at that moment, right? And it would be perfectly time aligned, right?
And do you have people using your Subledger for compliance already?
I mean, I would say that all of our customers intend to. I don't know that anybody's been audited, but again, like.
I mean, you're right. I guess I'm more referencing, like, instead of accounting compliance, more like KYC and other metadata type things.
We definitely have other people that are tracking other things in the reference documents. I have certainly counseled a number of the users of our system, but I'm not really privy to their implementations, right? Like the way we store the data and stuff, we can't see it.
Yeah.
The documents that they store, we don't ever see, right? We just get a URL to them, and they're always behind some sort of authenticated, face. So, I can't snoop or see, or I can't really speak to what they're doing. But it's certainly, I mean, it's perfectly logical and understandable that you could build a transactionally accurate AML and KYC compliance built on your accounting transaction record of what went down. I mean, the accounting is what needs to be in compliance, right? I mean, it is, the definition of what went down. So if whatever information you need to be able to prove for a past transaction is accessible and directly linked to each transaction, then you are, I think, by definition in compliance, right? I mean, it's kind of inarguable. Like, here's all the information at the time of this that transaction was made that we use to, pass it or whatever. And I'm sure you guys are going to use some compliance API or something that returns some sort of score or whatever it is, right?
For the KYC, so like for the KYC, a little bit it's not like we're giving a loan out. That it's sort of, did we satisfy the financial objectives in the sense of, was that person 70 and retired and not really well off, and we put them into a bunch of risky stocks, and then they lost all of their money, and on our end it would have been said that we didn't accurately assess their risk situation.
Right.
What situation?
Risk situation.
Risk situation.
So in terms of kind of like their records, it's sort of like I guess in part being like, okay, well, we've stored these records. When they signed up, they did this. This is the conditions they told us they had, and this is why we implemented our investment strategy based off of what they said, and this is sort of in our mind why they were aligned with each other. So this.
Right. So in my mind, for every transaction you make in and out of their account, right, there is a document that explains the transaction. We sold this much Caterpillar at this date and time, and we did that believing that their state was such because that's what they told us. And if then they change their state, the next time you make a transaction, you're going to use the new state. So you say, because of this, right? Like,
yeah, I think, well, if I even simplified it, it could be that, they're going to be a part of a, a group, right? Like they're going to be in, low risk group, right? And low risk group makes a transaction for each account. And it's more sort of the transaction saying, this person now wants higher risk. We've logged that they've, in a sense, changed their status.
Yep. So if you do it that way, then they need to see Rashawn's code to see if they were properly categorized as low risk, right? Like if you actually store the data that decision was made on, then it's viewable purely from the accounting record. Like here was the status. We assessed them low risk because of it, and boom, at this point in time, Caterpillar was a low risk investment or whatever, right? Because of whatever. Like, if you could go through a person's account and see every entry made, which I think is going to be, every transaction you make on their behalf, or however the proper terminology for that is, then bang. I mean, like there's all the information laid bare and transparent, right?
Yeah.
And the cost of doing so is trivial, right? And Rashawn doesn't have to build any sort of, historical status record keeping system or, like, right? He doesn't need anything. It's all like, here's the information we had at the time, boom, throw it in the record and go. That make sense?
Yeah.
What do you think about it, Chris?
No, I'm actually more thinking about how in our world, right, the definition of risk is just really, I mean, from a compliance, right, low risk means they should have bonds, but the reality is right now, the 30-year bond is 2.5%. And would you rather own that or Apple with the 2.5% dividend yield, So
Dealing with
compliance for us is not so cut and dry. That's what's
I think, well, yeah,
the point.
See, the other thing too is, right, you could buy, hypothetically, you buy Caterpillar, say Caterpillar is a lower stock. It's kind of the transaction also kind of is maybe you bought Amazon as well, and Amazon's perceived as a high risk, but since you owned a lot of what the SEC would call low risk, that you're okay with owning a very small sleeve of high risk.
Yeah, so you could in the record you could put all their positions.
Yeah,
right.
But the other thing I see actually too, since we're doing the kind of social angle, is when a Volkswagen incident happens, you could kind of log in. They were pro-environment at the time. All the data said Volkswagen produced very environmentally friendly vehicles. Now there's a huge scandal that no one saw coming, but clearly in the data when the transaction was made, the client and Volkswagen were both high on the environment, and it's clear at that timestamp that is why they bought it.
Sure. Yeah. I mean, whatever it is to require, and that's really up to your compliance, whoever's going to be measuring your compliance stuff. Like, you need to work through them. Like, what do you want to know?
Yeah.
To, clarify, because we're going to write it down for every goddamn transaction, right? Because it's incredibly inexpensive to do so. Like literally bordering on free.
Now, let's say every time we did a transaction, we're like updating somebody's holdings as part of the message. Would it be, in that case, then super easy that we just say, well, if we have 10,000 clients, how many of them are actually in Volkswagen stock? Is that like a 2-second query?
And that is not something that our system would be well suited to.
Yeah, that's not for accounting system.
Yeah. Yeah. That's going to be something on Rashawn's side, I think.
Yeah.
No, just curious, because you can add it to the memo or whatever. But
oh, as a portfolio-wide thing or something.
Yeah, that's where.
Oh, so you can add it
I'm just
like
saying,
a-
trying to think of, creative uses, because you could then integrate that with content and different things. It's a place to just keep track of things.
All right. So you would add that as a memo to the transaction, you think?
Right.
Got it. I see.
To the reference document,
The
the source document for that.
Because the reference document is, i.e., a receipt, right?
For instance, yeah, invoices, receipts, credit memos, disbursement, whatever. I mean, it's just
JSON on their portfolio or something.
right. What it is it's a human readable document that describes to humans precisely what it is they need to know to verify and audit the entry. So, in a traditional audit, it's like, okay, we're going to take, 1% of the invoices for the month of July, and we're going to call the customers and make sure they actually bought the stuff and received it. Like that's how audits happen, right? So you don't want to be digging through SQL queries and shit like that to do that. With Subledger, they could just, rip through the entries and pull 1% of them and, pull up those documents, which you've given them access to, and do the same thing, right? And if your compliance people are like, well, why did you put this person in this high-risk stock? It's like, well, look at their portfolio at the time. Like they were 99% in ultra-safe assets, and we put 1% into risk to drive their, their result up, but that's hardly risky portfolio, right?
Is there a way to, I guess, to sort of, if a regulator came in, like you could sort of segment out, the books or records so that like, whatever is typical on their end, say like, typically they're only viewing, the time and the form that came through when the client signed up, and maybe it is a transaction record, but the kind of say war storing, more kind of information to help us on more of a revenue / expense side, kind of segment that out beforehand or during an audit, so they can only kind of get a glimpse of what they need.
So what Subledger provides is a single URI per transaction, right? You control the documents and the access to those documents. So, in the case we're talking about, maybe the simplest, in Rashawn's terms, receipts, what you'd want the customer to see would be on the main link, right? It'd be an static HTML page. And then there could be a AML link, KYC link, and a risk link or whatever. And if you follow those links, you've got to have, you have to be authorized to get to those documents. So the customer could click on the link, but they wouldn't have authentication to read it, right? Or they wouldn't have authorization to read it. So, but your risk person would, and he'd only be able to see the risk portion. I mean, the beauty of storing things in the web is they're just all references, right? So if we give you one reference, you can structure that data any way you like. And you never have to ask us to change anything if you want to change it.
Yeah.
Right? Like if you come up with a better way or need to change it, bang, you do it.
Which side do the record identifiers get generated?
I'm sorry?
The record identifiers or the transaction identifiers, they get generated from Subledger, I'm assuming?
Transaction IDs are on our side right now. We're extremely interested in changing that.
Got it.
Right? We'd much rather have put semantics, but we haven't built that.
Got it.
If that's a requirement to get this deal done, we'll do it. And we're doing it in V3, and V3 is well underway, but we don't even discuss ship dates. And it's not, if you guys are planning on implementing in the next year, it's not something you should be worried about.
Any questions?
No, I think I'm good.
Yeah, and I think that was a good, good overview.
Yeah. So the other, that's good that you guys pick up accounting quickly. That took me a little longer.
So, you've seen our lemonade stand example or any of that? You want
I've not seen the lemonade stand example actually.
Oh,
I think
yeah.
I saw it a few months ago.
I'll take a. I got maybe do a quick run through.
Can you do a quick run through, Tom?
Yeah, sure. Let me see if I can figure out. Okay, screen share. All right, I'm going to do that here. You're going to see yourself. It's going to be very Inception for a moment here.
I don't think so. I got it. It's on your screen.
You see yourself?
No.
Can you see my screen?
Yeah, well, I see your little avatar talking, but you're not screen sharing right now.
Really? That is strange. Do I need to do more? Do I need to do this?
I don't think so.
Hi, John.
Hello?
Buddy, how are you, man?
Doing well. There we go.
You can see screen share now?
Yeah, I can see you now.
Okay. So you can see this too?
Yes, sir.
Okay, so here's a transaction log of entries every 2 minutes for about the last hour.
Can you make the font larger a little bit?
Yeah.
That's there enough? Yes. All right, cool.
So this is an application that's running out there and selling lemonades, by every 2 minutes. And if we take a look at the individual transaction, it's a very traditional debit credit journal entry with a total flow of $7.31 here. It's keeping track of inventory on the fly and applying real-time cost of goods to cost calculations. Its reference document is a PDF residing on S3 here. And, it's a pretty traditional invoice here that 4 lemonades were sold for $5 total, 35 cents tax. And then there's a bunch of information additionally attached to this. That is, how many units of lemonade we had in stock at the time and how many units of sugar and cups and various other things, thereby giving kind of the real-time cost analysis, including, I think on here somewhere is a real-time gross margin. So the script actually changes the cost of sugar and lemons and such for each sale. But at this particular moment in time, the gross margin was 60.81 for this particular sale. Right, and all of this information that we're seeing here is pulled directly out of the accounting record and is therefore completely auditable. Like, everything you need to know about this transaction is right in here. And why? So that's the regular transaction record. We can come over here and see the entries for an individual account like cash. So cash is counting up. Fortunately, it looks like the business actually makes a profit. Again, for each of these entries, we can get back to the reference document that made them. With simple API calls and such, we can plot the balance of that account over time.
Open up more lemonade stands.
Yeah.
No doubt.
I looked at this and I'm like, damn, dude, I want to sell lemonade 24/7. But this is not. How do we do a longer time frame here? Oh, if we do a shorter time frame.
It looks like probably the Silk Road profits.
Right. So what we have here is sale, 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 restock. Right? Sale, 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 restock. Because in the account activity in cash, you'll see every once in a while, it's got to go buy more inventory, right? So that's going to be a credit entry up here somewhere. So here's a restocking entry that we can take a look at. Now we bought $43 worth of lemons and $33 worth of sugar and $20 worth of cups. which costs 97.36 cash, right? Just, right, simple double entry accounting. Reporting section, right now, you can print a balance sheet for this moment in time. Love the little hula dance on report generation there. And here's a balance sheet, which could have, again, our largest customer does this with 350,000 accounts. But here's the position of the company, right? 8K in assets, 7K in equity, and very small liabilities for sales tax. Cash businesses are super simple. And notice that, our reporting system is so flexible that you can structure your accounts any way you like. And you can have, non-income statement or balance sheets statements. Like if you guys have to track other things for, conversions from sales leads, how much revenue from the customers that signed up from Google, stuff like that. Like, you could structure account or reporting to show that, who are the top customers that, this lead source generated for us or whatever, and how much is the total revenue from all of them. Like it's a very flexible reporting system. That's just, built of hierarchical structures of accounts.
Then in terms of, I guess, cost, is it usually on like a transaction level, or I guess how do you usually typically structure the, the cost of the product?
So here's pricing. It's per credit and debit entered. With any sort of volume, you get down to, under a cent per entry made. And the higher you go, the lower, it just gets cheaper and cheaper and cheaper to make entries. How many clients are you guys expecting to serve, like in the near term?
We want to be sort of, after a year of opening up, if we start to pace 5 new clients a day at, $50,000 coming in each client, then we'd be at a really good place in terms of, I guess, valuation.
Sure. So that'd be 1,500 clients. It seems like you're going to accrue interest for each of them daily, right?
Yep.
I'm sorry, fees.
Well, and it'd be over the days of, over 200 trading days, say, right? 250 of the 365 days.
Right.
Understood. Oh, so your management fee is only for trading days?
No, it's
it'd be for, I guess, yeah. That would be, those would be every day, but the balances would only update on trading days.
Yeah.
Oh, I see.
So, okay, so 1,500 customers times, so it'd be 365, right? Times 2. Plus, then, how often do you expect to be moving them in and out of trades? Or?
Not at first, not that often. We're going to start out with, new accounts, and then once a quarter, and then probably, when we get there, move to once a month.
Okay.
But then we're going to have a couple of things like on the expense side to kind of draw them in, right? Whether it's through services where they can link their other account.
Sure.
But that would be at most, one per prospect, right?
Right. Seems like it's going to be pretty trivial compared to daily fees.
Yeah, I think there will be more just use of reporting. Are we linking a lot of accounts and getting conversions? Like how much are we paying? As we get people, I guess where the position stuff is sort of more of a scheduled occurrence. The other one happens on more of an irregular time period, because someone could log in and want to sign up at 2 in the morning, or someone could log in and want to sign up at 3 p.m. And sort of, like that's going to be more happening on a irregular interval. I would say.
Right, but in terms of just trying to shotgun estimate the entry.
Yeah, transactions. Yeah, I think so. There, you probably would say if we signed up 1,500 people, you probably had, 10,000 link their account. If we have, right. So you have 10,000. Would add on 10,000 transactions.
Oh, so that's even less. I'm sorry. I thought it was 100.
Yeah, I mean, maybe if you group them all because they charge once a month for 9. Say you add on 50,000 transactions there.
But then you need the KYC and
yeah. So say like 1.2 million, I guess.
Okay. So right at that size, the expense to us would be $36.98 per month, right? For that, I'm sorry. That's for, I think we did a whole year's worth there.
Yeah, that was the if we're pacing at a point where
you're probably, I'm sorry, you're probably somewhere more like in here monthly. Yeah,
I think you're right. Because if you would, obviously when you start, that's sort of like where we want to be on a daily level, right? So it'd be more like that would be year 2 technically, right?
Yeah. So, on a monthly basis, somewhere between 1,000 and 1,500 once you have 1,500 customers active.
Yeah.
Which I gotta believe is a lot cheaper than paying accountants to figure it out.
And
Hey Tom, how much are how many is there, or what's an average line look like for a journal entry? I would assume that it's not just 2 with a credit and a debit.
Well, for an interest calculation, it would be. And I think we did some calculations in our database, and the average was 2.3.
What about, I guess, in terms of one of the things that we have that's probably very different is dividend accruals.
Yep.
So in a sense, those come in as there's usually a post date and then a day they came in.
Yep.
And so that will be like a transaction and.
Oh. Well, our system allows out of order entries.
Mm-hmm.
So you could actually make the entry back in time.
Okay.
When they actually were received, regardless of when you get to making the entry.
Yeah.
So that the historical record would be correct. Or you could do it the traditional way if that, makes your people more comfortable.
Yeah, so it's sort of like, you could do I think because a lot of times this is where you usually put in a cancel out transaction in a sense and then rebook, right? A lot of times.
Wait. Oh, so you make like an estimate and then an actual?
I think sometimes like say there was a trade price that got entered in and then it was found out to be different. A lot of times you do
okay. Sorry.
A transaction to say
an adjustment.
Yeah. So there's like you could do an adjustment, right? Or you could, in a sense, do a cancel rebook, right? Like that trade was actually null, in a sense. Come up with the inverse of it, and then enter in a new trade, and that's sort of the new updated line.
If I'm not mistaken, you do both, correct, Thomas?
It depends on how the accountants would prefer to see it. I mean, making a reversal entry, and then it can still be one transaction either way, but. You can make 2 separate transactions, reverse the old one and explicitly correct it. Or you can have one transaction that reverses it and has the new one in it, which is the way I'd prefer to see it, because it's a single transaction. It's
group it together.
Or the third option would be a pure adjustment. I think the adjustment is considerably more error prone than reversal and redo.
Yeah.
But the adjustment one is the one that a lot of accountants are just used to. They're not just because they don't know any better, right?
Maybe. I mean, I just think from a software perspective, it's much easier to reverse the old transaction and make the new one than it is to calculate what it was. Or
yeah, it's a little more human readable.
No, but like auditors, they can't change, so they have to make adjustments. But
well, and it,
yeah.
actually, auditors are just pretty tight with all the entries are in clear and explicit. Like, as long as you have that, they're cool. Like, everybody makes adjustments.
No, right. That's my question.
Interesting.
When the business gets really big, they want to see you accruing for, statistical expenses, on a regular basis. And then if you have to adjust those out, they can get a little snitty. But, at the end of the day, it's all about being, accurate and transparent. So.
And then I guess in terms of what's the time usually for someone to kind of get up and running, so to speak?
It usually takes if we go through somebody that has an existing business flow, to identify those 6 to 12 transactions. Usually takes 1 to 2 hours. We kind of create a chart of accounts with them, to make sure they have all the information they need, and we figure out how to make the account. Sometimes we have to go and do a little head scratching and talk to, our people, and then your accountants and stuff will have to look it over and make sure it's cool. But once the transactions are identified and everybody agrees on kind of the methodology, the software implementation with somebody as good as Rashawn should take about 8.5 minutes. Now, I can't speak for how long it'll take for Rashawn to get it done or whatever, but it's a fairly small project. Like, whenever a transaction is made, a job is dropped in a queue, and that queue system picks it up and makes a transaction in us. Is the way we prefer to see it implemented. So it's not a great deal of work. It's a single API call per entry.
And what's the limit, I guess, for one transaction? I guess, is it by bytes or?
You pay for credit and debit, not size, not how much is credited or debited, but so you can make as many entries as you like, and that's this number.
And zeros too, Tom.
I'm sorry?
I said and zeros, not like I don't think anyone. I believe you can pay for credits, debits, and zeros, if I'm not mistaken.
Oh, right. Yeah, you can notate accounts. You can put messages in accounts that don't affect the balance by making a zero entry. That you can say like, "Hey, it's your anniversary. Thanks a lot. Here's a $10 credit," or whatever. Stuff like that. You can kind of notate accounts that if customers see them on screen. I mean, one of the nice things about keeping the customer account history in Subledger is it just makes it super easy to provide them with a detailed historical view of what went down. And unlike Wells Fargo Bank, we'll keep your information on for the life of the account. So, if your customers want to see the last 5 years worth of information, great, no problem.
I guess one question on that too. We could, just I think technically we would deactivate the account and keep the record, because it would be, for performance history in a sense. For some of the stuff, like
not quite sure what you mean.
So like say we've been around 10 years now, and someone was like, well, how well have you guys done on an investment level? Someone could, in a sense, signed up, been with us for 3 years, and then been like, okay, I'm actually going to pull my money out. But we still want, in a sense, those records for compliance, in the sense of like, you guys said you performed really well. Did you, in a sense, delete any accounts?
Yeah.
Like if you deleted already left.
Yeah. Subledger does not allow deletion.
Okay, well yeah.
It's like, it just doesn't.
Yeah, everything's always additive, right, Tom?
Right, and you can archive accounts so they don't show on reports and stuff like that, but they're still around. Or I think they, yeah.
Yeah, I think that covers it.
How long does it usually take for an average transaction to process, like to get a success response back from
it's been about 0.7 seconds now.
0.7 seconds? Yeah, that's what we said. Okay. 0.7 seconds. Okay.
It's a little longer, and it'll get shorter and shorter and shorter, but
the average thing in software or technology is it's never going to take longer.
I just mean we know how to make it faster. It's just a matter of getting the coding done, kind of thing.
Yeah.
V3 should be like much faster.
Yeah, 0.7 seconds still is a lot better than 30 days.
Yeah.
Or even worse, quarterly. Well, a question that I've wanted to ask you probably for the past year. Where have I know we had some speculations when we were working on the project, but what has been the one area where you're like, oh, I didn't realize that it could solve this problem that you've seen out in the wild, or even from the existing customers?
The didn't see the AML KYC thing coming. When we started Subledger, we didn't see the cryptocurrency thing coming, but we knew we wanted to be able to do a lot of decimal places for accuracy. So, we kind of got a free ride on that one. We haven't, most of the implementations have been pretty straight up. The multi-currency stuff, we had worked through ahead of time, and it's fun to see people using that. Our largest customer does do multi-currency accounting. That's I think that's it. That's all that I can think of at the moment. It's also fun to see. I know we have that largest customer. They manage they do Bitcoin to Indonesian rupees or something, and back continuously. And they're managing their float and inventory and stuff via our balances and whatnot. So it's cool to see people not just writing the accounting record, but reading the accounting record to make real-time software decisions. Right? Like, how many Bitcoin do we need? Well, how many have we used in the last 10 minutes? Let's buy that many at least, right?
Have you ever migrated anybody from SAP to Subledger?
No, we don't. And we never really wanted to play that role. Someday, a software developer will build a complete ERP system with Subledger as the ledger. But Subledger does not provide and is not intended at this time to be any kind of replacement for a primary ERP system. Accountants prefer to use, a small handful of packages. We don't want to threaten that. That would make a sale incredibly hard. It's already hard for us to sell because it's modern, and accountants aren't exactly technologically aggressive individuals. So they're so conservative that we felt that we would need to create an import tool from Subledger to our customers' accounting systems. The accountants don't even want it. They're like, no, I want to put my hands on it. I want to look it over. I want to enter the values myself. So, and that's fine. It's a simple exercise once a month, and they certainly know how to do it. But they're nobody's begging to use Subledger as a primary accounting tool.
That's good. Is there any other questions?
I think that was good.
No, thanks for your time.
You're welcome. Let me know how I can help. And consider that Subledger has accounting services available should you need some, development muscle during the implementation phase.
Awesome.
Oh, that's great.
Get your son on it, right? Get your son on it, right?
That's right. He bills like $3.50 an hour.
As all math majors typically do. It's either $3.50 an hour or nothing.
Yeah, well, somebody's got to pay for his schooling.
That's
Yeah.
true.
Starting to see.
Anyway, cool. No, I mean, yeah, we're here to help in any way we can, and we'd love to work with you guys.
All right, awesome. Thanks a lot.
Nice, John. It's good hearing from you, man.
Yeah,
Good
good
to hear from you guys too. Take care, buddy.
I'm gonna be in a helicopter this week, John. I'll think about you.
All right.
Where are you going to do that, Rashawn?
Was thinking about. I have a friend coming to town. Was thinking about on Groupon. They have these tickets where you can just go around Manhattan on a helicopter for
Nice.
half an hour or something like that. I've never been on a helicopter before, but I've jumped out of planes.
Very cool.
Good, Rashawn. You'll like it.
All right. Any tips, John, before I get in that thing? Don't jump out. Here's my seatbelt.
Stay away from the tail rudder and have fun.
What's the tail rudder? What's that? The back one?
Yeah.
Oh, the tail
Yeah.
rudder.
Well, technically, stay away from all of
Got it.
Okay.
Thanks, man.
Sure.
them. See ya.
Have a good one.